Hey everybody, this is Jim at SP500chart.com. It's a little bit before 2 o'clock on Sunday afternoon, March 23rd, 2014. We're going to take a look at what happened in the S&P 500 over the past week, what took place more specifically on Friday in our weekly review. And by the way, just so you know, this is something that is open to everybody. I post this on YouTube as well as on the website, and it's available to subscribers and non-subscribers alike. I also unlock access, to the Monday, Tuesday, Wednesday, and Thursday videos because I want everyone to see every video, keep it all above board, keep it all out in the open. Of course, only subscribers get to see the videos after each day's close. So it's like if you're a subscriber, you get a video on Monday, you get a video on Tuesday, you get a video on Wednesday, you get a video on Thursday, and you get the weekend video at some point over the weekend. That's if you're a subscriber. If you're a non-subscriber, then at some point over the weekend, everything is unlocked. You get to look back in hindsight to see if any of this worked. Subscribers just get a little bit more real-time advantage to seeing these videos. But let me read this to you before we get going. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out with a 30-minute chart. Well, we had a little bit of an interesting, an interesting day on Friday. We got above. This is a little bit broader context. Tell you what, we can bring this in a little bit. There. We've been looking at two resistance lines. And one is up here, almost perfectly horizontal, right around about the 1883, 1884 mark. I've been calling it 1884 because it's easy to remember. Then we had another resistance line down here at about 1774. And we gapped up over that line on Friday, made two attempts at 1884, then actually ended the day in kind of what is seemingly kind of now a typically volatile manner where those early gains were completely given up plus some. So the total swing from high to low on Friday, we had a high right of, let's call it 1884, and a low of about 1864. So we had about a 20-point swing from the morning highs to the afternoon lows. This line proved once again that it is resistance. So what does that mean? Does that mean that because we bounced off of this and back down, that nothing is going to work, that this bull market that is now over 5 years old is over? It may, but does it necessarily? Absolutely not. Absolutely not. You may hear some people, and I haven't yet, but I've sort of been a recluse so far this weekend. You may hear people talk about a double top. Well, yeah, maybe, but I got to remind you, any time you have a market that is rising, such as we've seen, and this just shows you the past 2.5 years. About 2 years. Anytime you have a rising market, there are numerous opportunities for you to think you've got a double top. Okay? When you're in a rising trend. For example, back here, in August of 2012, double top. Except it wasn't a top at all. Then, in January of 2013, we'd come back to the highs that had been set in the fall of 2012. Oh no, double top. No, not at all. Kept on plowing up. Got a little resistance there, turned back just a bit, plowed back up. What about right here in this little stretch of time in February and March? Well, you could say, well, we hit this level at about 1530, and then we came back to about 1487. Now we're back at 1530 in early March. Ooh, it's a double top. No, kept plowing on up. You see my point. At every point you are in, when you are in a rising trend, there's a point at which you hit a high and then you get a reaction against that bull move, a short-term bear trend. And when I say bear, I don't mean a bear market, just a short-term negative trend. Then a point of support is reached, and then on the way back up, you've got to pass through the previous high. And a lot of perma bears seem to like to call those double tops. They're not. Okay? And to move in even closer on a 30-minute chart. Pardon me, it's going to take an hour. Here, back in January, we were up around 1850. Came down about 110 points. Came back to 1850. Guess what? Double top, only it's not. You see the point. There are people who will trade on the simple thesis, flat tops produce market drops. Well, there's some legitimacy to that until you get through the flat top. So if you're gonna short based upon a flat top, first off, in 2014, you didn't get very far with it, because if you had shorted back here, the market gave back about 18 points, and then it went on to set a new high. So as we zoom in just a little bit more on this 15-minute chart, everything right now seems to be saying that this is a line that needs to be watched, and that I would expect it to be taken out. And the reason I expect this line to be taken out is because we have a pattern right here that tells us to expect something higher than what we've seen so far. This pattern tells me to expect something in the mid-1900s. I've been calling it 1958. This looks like a breakout and a pullback and a consolidation. There is a bear possibility, but that would not happen until we break back through 1840. So as long as 1840 holds, I'm good with the idea that we're going to 1958. And I'm also looking at 1884, a break above that line, as the indication that that move is imminent. So guys, as far as the week went, we knew that we had come into the week. Here was 1, 2, 3, 4. Here's our 5 days. We knew that we came into this week with weakness, because we'd broken this upward trend. We'd sold back down pretty heavily on the 13th and again on the 14th. But we came into the week with this little pattern right here highlighted between these two darker blue lines right here and right here, with the idea that if we get above this blue line, that we would then likely mount an attack on this second descending blue line. And if we got over that, then the turn is in place. That this week and a half of selling is now telling us we're about ready to be done with this. Now, when I say a turn, that doesn't mean you get over this line and then you just rocket straight up. Often you'll get over a line and then you'll come back for a back test. Really interesting to note that on Wednesday of this past week, we came up to that 1874 resistance, could not get through it, and then when we got the Fed meeting and what was discussed and some of the details about quantitative easing and and backing off of that. And I'll be honest with you, I don't even follow all that stuff. I probably should. I just follow the chart because I figure there's plenty of smart people who eat all that stuff up. It's not my personality, but there's plenty of smart people who eat all that stuff up, and it's all digested, and it makes itself known to you and me in the chart. So we broke out over this descending resistance line, came back for a near picture perfect back test. Then Thursday and Friday had a solid gainer on Thursday, and then a slight loss on Friday after tagging resistance again. I've added this line right here, just in case that proves, just in case we get a test on this. This would be obviously drawn from our last two lows that I think were significant, especially when you see the degree of the bounce that we got off of this line. If we come back to this on Monday or Tuesday, it'll be interesting to see if this line still works and if it pushes us back up for another go at 1884. If we get over 1884, I think we have what I would term an intermediate target of about 1926. And by the way, this line I think is not as important now, so I'm going to get rid of it. I think it's this big pattern that we need to deal with. If you're looking at this, you're saying, well, didn't you say that was an inverted head and shoulders? Yeah, but it looks to me like this is much stronger resistance than what's going on here at 1874. So 1884 is really, I think, now the line to watch. So overall, I think it was a pretty good week. I think the chart bore itself out pretty nicely. We got down into this little fuzzy range between 1840 and 1849 or so, which is, again, it's not a perfect trend line support, but we got into that area, made bottom, and then broke out of it. Let's see if we continue this trek upwards. Finally, if we take this line and create a parallel line, you can also see that it fairly well defines the last 1, 2, 3, 4 rallies that we've had in the past week. So let's keep that. Let's keep this little parallel channel kind of in mind. And isn't it interesting that those lines run almost perfectly parallel to our larger trend in general? So guys, there's your video for the week ending March 21st, the first day of spring 2014. Thank you so much for taking time out of your day to watch it. If you are a subscriber, thank you for your support. If you're not a subscriber, remember what I said. For less than a cheap cup of coffee per day, you get a video after every day's close. Think about it. Go to sp500chart.com, sign up today. You get a 2-week trial period for $6.95. I mean, you could buy a $6.95 cup of something at a Starbucks. So, think about it. Go to the website, check it out. Thanks for watching. Take care.